Just one thing that I should mention. It's about 9 o'clock here. And I've got a 3-year-old daughter who usually wakes up around 10 o'clock and needs resettling. So around about 10 o'clock, she's likely to wake up. So she'll probably just hang out with me here while I finish the AAVE for a bit. So just letting you guys know.
Okay, no problem at all. Okay, we are live.
Cool. Good deal.
Okay, great. Yeah, so thank you, Kain, for joining this this meeting. It's a usual meeting that we generally do with our community. And so right now we discuss with you about one of the main discussed project in the DeFi space, that is Synthetix or Synthetix. What's the right one?
Synthetix, yeah.
Synthetix, yeah. No, and the first thing I think that it's the history of the project, because you launched this project in 2017, right?
Yeah, 2017. Yeah, it goes all the way back even to as far as 2016. So yeah, it's but you know we launched it, did our first raise in 2017, and then went live on mainnet in 2018.
And it was called in another way. It's called
Haven back then. Yeah.
And what was the topic? Just to understand of Haven and how to migrate the project from Haven to Synthetix.
So back in 2016, 2017, there was really only Tether, as a stable coin, right? That was the only kind of viable stable coin. There were a few others that had been around for a while, BitShares, et cetera. But in terms of something you could actually use that had, traction and integrations into exchanges, it was really Tether. And I think that a lot of people, in crypto back then, had concerns about the mechanism behind Tether and the fact that it was, US dollars in a bank and trusted and Bitfinex and, all of the various things that kind of went along with that, right? Now, subsequently with the launch in 2018 of all of the regulated stablecoins, USDC, TrueUSD, Paxos, Gemini, all of these different regulated stablecoins that use the same model, I think that a decentralized stablecoin that we were trying to build and that Maker was trying to build back then, has kind of been marginalized a little bit, unfortunately, because, a lot of the activity that still happens in crypto these days is connected to centralized exchanges. And, centralized exchanges don't really mind if they're using a centralized stablecoin, right? So, they were always kind of okay with Tether and, are okay with TrueUSD and Paxos, and now some of the exchanges like Binance have BUSD and all these different things, right? So we found, I think by the time we got to mid 2018, that it was going to be really hard for us to get traction with this stablecoin project, and that the best bet was going to be to accelerate the transition, which had always been kind of contemplated, but wasn't really there yet, to a multi-currency stablecoin system, that supported a bunch of different fiat currencies, and then obviously other assets later.
So, and Aven was about this. So to create a bunch of stable coins, and collateralized by what?
By the SNX token. And this was, I think, the big difference between us and, some of the fiat-backed stablecoins, right? We had a view that if you used crypto to back the token and back the stablecoin, that it could remain permissionless, right? Which back then, Maker had a similar approach: use ETH, use a permissionless asset to back it. Now Maker's obviously shifted a little bit because they're using permissioned assets and they're going down a different path. But our view was always that this idea of keeping the system fully permissionless, that you didn't need to use assets that could be seized or locked or whatever.
Yeah. And then you migrate on Synthetix, putting the exchange above and the possibility of trade these stable coins. So this was the main, part, the main feature of the migration of Synthetix or of their branding.
Yeah, I think one of the big issues that we sort of encountered in the launch of Haven was the idea of capturing transaction fees for transfers, right? We had this fee built into the mechanism. So if I sent you $100, a small fee would be taken out of the transfer. There were a lot of problems with that, practical problems with integrations and all kinds of things. And then, ideological problems there, even if it was potentially viable, it was hard to scale that model. And so what we found is that the transition to multiple different assets allowed us to capture the transaction fees between exchanges rather than in transfers, right? So now if I send you, 100 euro, synthetic euro, there's no fee. But if you take that euro and convert it to US dollars, then you pay a small fee. So rather than capturing it on transfers, we now capture on exchanges. And, to facilitate that, we built Synthetix Exchange, which was designed to essentially allow people to trade all these different assets. And, subsequently, we've obviously added a lot more assets. There's now, 25 different crypto assets. There's 7 different fiat currencies. There's a bunch of different assets. There's equities now that are supported. So, the range of assets originally was kind of contemplated to be these different fiat currencies, but it's expanded significantly since then.
Yeah. And a lot of people, I think, that asked you the same question is, if you have to, describe Synthetix in simple words, so to the people, how do you do that? So what is a Synthetix?
This is a problem that we've had, obviously, for a long time, right? It's not a system that kind of lends itself to simple explanations, right? So I think what we've tried to do lately is break it apart, right? And say, for traders, right, people who want to use the exchange, who want to access the functionality, the explanation is essentially that you can trade any of the assets that we support, right, with zero slippage. And you can pay a single fee, right? A 30 basis point fee to trade on the exchange. So it doesn't matter how large the size you're trading, you get that same price. There's no slippage. And that's the advantage for a trader, right, who wants to use Synthetix Exchange. So as an example, we've had someone in the last few days even join the exchange, and he was making $750,000 trades between ETH and inverse ETH. Right. And, over the course of a couple of days, traded $2 or $3 million of volume. But the advantage for him, as he saw it, was that he was not getting any slippage. Right. He'd go and trade an inverse ETH index without, paying significant fees or borrow costs or all these sorts of things you would pay on a futures exchange. So for traders, that's really the value proposition that, you can come and you can trade $1 million worth of any asset with no slippage. For people who are staking the system, who are enabling traders to actually use the exchange, the mechanism is a lot more complex, right? You need to get access to the SNX token, and you need to lock that token. And when you lock the token, you essentially issue debt into the system. And that debt is what all the traders use. And so essentially you're providing a service to traders, and the traders are paying you fees for providing that service, which is, essentially underpinning or collateralizing this exchange.
Yeah, so basically we have stakers, basically help to the platform to manage the debit, and we have traders that at the end are the end users of the platform, basically.
That's right. Great. Exactly.
And one of the most interesting feature of Synthetix is the infinite liquid concept. Can you explain like if you do to a child, how it works and what's the idea of infinite liquidity that is strictly related to the spot price and zero slippage?
So, the interesting thing about Synthetix is that the pricing comes from an external oracle, right? So we have this price feed that goes and looks at the external market and says, what's the price of Bitcoin right now? And it comes up with the price. It aggregates a whole bunch of spot exchanges, futures exchanges everywhere. And it comes back and says, Bitcoin right now is 68.50, right? USD. That's the price. And the advantage of using Synthetix Exchange is if you're holding synthetic assets in Synthetix Exchange, you can turn up and you can say, I would like to access that $6,850 price, right? And I've got $1 million worth of synthetic euro, and I want to buy Bitcoin at that, 68.50 price. And no matter how much you have, the price always stays the same, because the price at that time is the reference price. That's the price that's locked in. The Oracle says the price of Bitcoin is 68.50 in this moment in time, and that's what you pay. Doesn't matter if you want to buy $1 million, 10 million, 100 million, that's the price.
Great. And this is another concept that the normal traditional traders or traditional user have some difficulty to understand. So who is the counterparty on the other side? So I'm used to trade against another one that plays sell order or buy orders, but in your platform, basically this is quite different because you are trading with the platform itself.
Yeah, exactly. You're trading. It's a little bit like Uniswap or other auto market makers, Curve, things like that, where a bunch of people come together and they provide liquidity, and they put that liquidity in, and they have a set of rules around how that liquidity can be accessed, and then anyone can turn up and access that liquidity, right, based on the rules that have been defined. And so as a liquidity provider, I can turn up and I can say, I want to put my assets to use, in Uniswap or in Curve or something like that, and you can turn up and trade against it, and you don't need to wait for a counterparty. We're already here. We were already there. We already put all of our liquidity in, and we're now asleep. Right. And we're, just hanging out. We're out of the, doing whatever we're doing. Right. And you're trading against, this contract that we've made possible because we put all of our assets up. And Synthetix is a similar concept, right? All of the SNX stakers turn up, they put all of their assets into this pool, and then you can turn up and trade against it.
Okay. But one question related to this. But one of the difference between you and Uniswap is that basically you can trade whatever you want because could be synthetic. I mean, how do you manage the debit of the platform? Because if I buy SBTC using maybe the SNX that I locked, if the price goes up and I sell, I can do that. But who will handle basically the debit that maybe the platform doesn't have in this moment?
Yeah, so essentially all of the SNX holders are counterparties to these trades, right? They're the ones who are taking the risk by facilitating these trades. And I think an important point to understand is that when you turn up to the exchange and you have $1 million worth of synthetic US dollars and you make that trade, no money is kind of created or destroyed.
Yeah.
Right? That $1 million just gets converted from one price to another, right? But there's still $1 million worth of assets. It doesn't go up or down. It's only after the trade's finished, then the prices start moving again. And I think the important distinction between Uniswap is Uniswap, the price is based on the assets that are in the pool.
Yeah.
Whereas our price is based on this Oracle price, right? And I think one example that can help, particularly for people who are used to trading large sizes or trading with OTC desks and things like that, is if I turn up to my OTC desk and I say, I want to sell 100 Bitcoin, right? They give me a price. They deal with the hedging of the risk and, they go out and make sure that they can cover that price, right? But they give me a price and, that price is for that quantity at that time, right? And there might be a little bit of, movement or spread built into it. But if I turn up and say I want to sell 1,000 Bitcoin or 5,000 Bitcoin, whatever the number is, they'll give me a price that's the price, the all-in price to do that trade, right? And essentially what we're doing is a similar service where anyone can turn up and they all get the exact same price because it's based on the Oracle.
Great.
And
Thank you.
how did it came out, Kain, this concept of debt distribution? Unique.
Yeah.
I think that you are maybe the only one to have in the market right now this kind of concept live.
Yeah, I think we are unique in good ways and bad ways, right? This model is far higher risk, right, for stakers than even a Uniswap model. And Uniswap has a decent amount of risk, right? There's always risk when you're trading, right? And when you're providing liquidity as a market maker, you're taking some risk, right? As a market maker, you want to limit the risk as much as possible. But like any product, there's a trade-off between the quality of the product or the features of the product, right? And how much margin you can capture. And with Synthetix, we've essentially pushed the value capture as far as possible. We've given the highest value product we can give to traders, right? But there's a lot of risk in providing that product. And so it's important that, things like hedging and what have you happen within the network, and that the network is balanced. And we've got a number of mechanisms that are planned to help to balance the network automatically so that anyone can come and trade, and we can make sure that the overall debt pool is as neutral as possible.
Great.
There is it's similar to the concept of the clearinghouse in financial markets.
Yeah, exactly right.
Yeah, because I'm coming from the industry of finance industry, and it's pretty similar the concept, but I never seen this kind of concept applied to the
yeah. I mean, I think it's really interesting, right? Because in its own way, it's, clearinghouses are risky, right? They blow up sometimes, right? They have rogue traders, and things go wrong and they don't hedge properly or whatever, right? Typically, a clearinghouse will have a whole bunch of flow going, in both directions, and they'll be balanced, and but there's still risk, right? Especially if you're taking, you're internalizing some of the flow or taking large trades or whatever it is, right? But over time, you make money because you have that spread and you build it in. You have some losses, but over time, it's just a game of sort of probabilities, right? And I think what's interesting about the Synthetix system is that there's no central party, right? There's a whole bunch of independent stakers that have all turned up to this clearinghouse, and they've agreed on the rules of how they're going to operate, and they're all independently responsible for hedging their risk, right? Some of them don't hedge at all. Some of them hedge a lot. Some of them hedge, more than they need to. There's a whole bunch of different strategies that you can take, and that's kind of the reason why. We think over time, the competition between the people who are participating in this pool, who are, the clearinghouse, this distributed clearinghouse, will get better and better, and their performance will improve, and they'll start to, have all kinds of automatic systems for hedging their risk and watching trades coming in, and, various things. Because if you think about it, if someone turns up and they're about to trade, $1 million worth of BTC, right, and they want to short BTC, as an SNX holder, I may want to go out to the spot market and hedge that risk straight away, right? And go and, take out whatever you're going to do, right? There's a number of things you could do, options or buy some futures or whatever, to hedge your risk and ensure that, you remain market neutral.
Yeah. Great. And I would like to ask how inverse synthetic asset works, because the hash token is pretty quite easy to understand, because they just track the price that you receive from external sources. But how works the inverse tokens? Because it's quite
not well is the answer. Look, they're good tokens, and they do a job. But they've definitely, outgrown their usefulness to some extent, right? They need a bit of a revamp, maybe a refactor. And so, when we launched them, they were really supposed to be a proof of concept, right? And like an inverse tracking index, it was rough. We knew that there were some rough edges and it wasn't a perfect solution, but we thought, let's just get it out there, and, in a few months we'll improve it. And then a whole bunch of other things happen, and they just kind of have existed and continued, and, they need to be improved. So at the moment, the way that it works is essentially a dollar of movement up on, let's say, Bitcoin, right? Results in a dollar movement down on inverse Bitcoin. Right. That's essentially the way that it works. Right. So the issue arises because they don't rebalance regularly. Right. And so the further away from the original price that they were set, the more leverage, you get essentially, or lose leverage. Right. And so we have a cap of 50%, 2x up and 50% down. Right. And the intent of that cap is to essentially limit the leverage so that it doesn't get too crazy and get too skewed.
In one direction.
And so it'll hit the limits, and there's all kinds of stuff. So look, I don't think we've necessarily talked about this too much, but the plan is hopefully in one of the next couple of releases we're going to release a new version of the inverse Synths, which will rebalance probably on a daily basis. Right? And the way that it'll work is you will buy a certain dollar amount of these Synths, and each day it'll rebalance, right? And it will continue to track much more accurately without losing touch with the underlying asset. The downside of this approach of rebalancing regularly is that what you see in terms of the token value, right, may not, on Etherscan, for example, right? If you go and look on Etherscan, it may not track to exactly what the value of the token is today when you look at the exchange, because there's calculations in the background happening that haven't reflected yet because you haven't settled the trade. So there will be, there's some trade-offs obviously, but if you go to Synthetix exchange, you'll see what the value is and it should track much more accurately. And it'll also allow us in the future to then add leverage, right? So you'll be able to have, 2x short, 5x short, 10x short, etc. And that daily rebalancing will just keep it much tighter. The inverse Synths are nice and they're cool, and it's a good instrument in some ways, but it's a bit rough and definitely needs some polish. So
great. Thank you very much for the explanation.
And in terms of competitors, Kain, what kind of competitor do you think you have right now in the market? So, for example, do you see as a competitor, for example, MakerDAO, that it's a synthetic dollar too?
Yeah, it's funny, right? Because back in the day, yes, right? Like we were very much competitors, right? We were the two, kind of decentralized stablecoins on Ethereum. And there was a project you guys may remember called Basis as well, right? I think between the three of us, we were like the three, kind of projects who were competing to try and build this decentralized stablecoin on Ethereum. And obviously Basis didn't kind of launch for a number of reasons, but Maker had been in the Ethereum community for a really long time, since back before even mainnet launch, right? And so I think that a lot of the core Ethereum people were very excited and focused on the Maker launch and the DAI launch. And that somewhat marginalized us, right? And what we were able to do by launching Synthetix was to kind of sidestep that, right? And move away from it and have these different synthetic assets and kind of not focus on the USD stablecoin side and kind of accept that they were going to take that, market share and they were going to have that position in the ecosystem. And, over the last 2 years, they've come to dominate DeFi, right? They're kind of the cornerstone of DeFi and almost every single project is integrated with it and uses it. I think what's been interesting over the last few months is the path that they've chosen to go down has alienated some of the core people, right? Those same people that supported them back in the day that are very focused on, trustlessness and permissionlessness and censorship resistant and all of these things that we all used to care about, in crypto. I think that we do have an opportunity if we can continue to build liquidity around sUSD to potentially offer an alternative, right, to DAI. I don't think we're going to replace DAI, and I don't think we necessarily even want to try and do that. But I do think that we want to be an alternative so that people who are looking for a different set of trade-offs can potentially, use sUSD over DAI.
Great.
And just a question, a bit off topic, but what do you think about the integration of a USDC in MakerDAO?
I mean, Rune and I had an interesting debate on Twitter the other day. Look, it's funny, right? Because I used to be really against USDC, right? Just on an ideological basis. But I find myself more and more using USDC, right? I use it personally, so it has a lot of utility. And I think that's part of the reason why I was so worried about it, right? Before anyone used it, I thought this thing is going to be good and people are going to use it and it's really dangerous, right? Like, it's something that I think is like, has this sort of dangerous allure to it, right? It's shiny and works really well and does all these things, but there's an underlying risk that you're taking by using it, right? Which is that, ultimately it can be blacklisted. There's a mechanism for it. It hasn't been used, but it could be used at any time. And I think when you look at ultra censorship resistant platforms like Augur, they've said many times that something like USDC doesn't work for them, right? Because they need it to be totally trustless and permissionless. And so, adding USDC to DAI, to me, I get the reasoning behind it. It was a sort of short-term play, and I totally understand it. But I think it's a path that's risky. What's kind of interesting is, Maker's been talking about adding permissioned assets for a long time. Like, it's not, this shouldn't be a shock or a surprise to anyone.
No,
but absolutely. I think the assets they were talking about is like, tokenized bonds and real estate and things that maybe don't feel quite as,
essential or fundamental.
Yeah. And then like the first permissioned asset they add is USDC, and it's like, whoa, like, you're really serious about this, right? Like, you're really going to go down this path, right? You're not messing around. And so, for me, I think for a lot of people, it doesn't make a difference. And as I said, I use USDC, so it doesn't stop me from using DAI. But there is an element to it that just doesn't feel great. I don't love it. And I think a lot of people in the space kind of have a similar feeling that, something's been lost in single collateral DAI.
I think the same, but if you think, for example, even the lending platforms like Compound, AAVE, or the other platforms, the most assets that are borrowed are still stable coins, centralized stable coins. So it's within the market yet the stable coins centralized. So I think that you are moving, a step forward, trying to avoid this kind of connection with these assets.
Yeah, absolutely. And I mean, to go back to your kind of original question around like broadly, who are the competitors? There are a lot of new competitors arising for different asset classes, right? A lot of options platforms, popping up. Open's really good. There's a number of different, decentralized options platforms that have been worked on. There's other things, liquidity providers, things like Curve and what have you, that you could argue, are trying to get massive liquidity on chain for stable coins, right? Which is, another kind of use case for USD and fiat tracking stable coins, right? So there's things like that. So, Synthetix is interesting in that it touches a lot of different aspects. And then, there's projects like, Market Protocol, for example, that are building, synthetic assets and trying to, track other assets. I think we've probably got the most traction of any project that's looking to kind of get into this space. But, DeFi moves so quickly. Who knows what the next 3 months will look like.
Okay. Can I add some question to USDC and Maker? I feel that probably in the next months we will see Circle and Coinbase to go through some sort of hybrid approach for backing USDC. I don't know, with a new release of USDC or whatever. So the first question for me is, what do you think with a stable coin that could be partially basically centralized, like could be, for example, Maker in this sense? And the second question, just related to the comparison between you and Maker, it's what do you think about not having a negative interest rate compared to have something that help you to spread any debit that could have the platform natively like you?
So, I think to answer the second question, all of the fiat coins, right, in the environment that we're in now, are going to have an interesting path forward, right? If we get to a negative interest rate environment, across the board, which it's not far off from that, right? So the question is, how do you keep this thing working?
Yeah. And
I think if we go all the way back to Tether, right? Tether was not a money-making operation, or it wasn't intended to be that, right? I think it made a lot of money, but it wasn't really the main point. The main point of Tether was get as much money as possible into Bitfinex very easily, right? And that's why, for me, I always found the idea that, it was unbacked or whatever. And, aside from some craziness around borrowing things from each other and weird stuff like that, the idea that Tether was, this total scam and unbacked or whatever, I always found quite strange, because, it was really an on-ramp, to Bitfinex. That was its intent, right? That was what its purpose that it served. And as long as it was bringing money into Bitfinex, the trading fees were going to cover the operating costs of Tether, right? It's not hard. It's not that expensive to operate that. And I think with Circle, it's a similar thing, right? Coinbase makes more than enough money to operate, USDC at a loss, right? For a long, long time, right? Even if, we get into, single-digit negative interest rates, right? They'll be able to operate, I think, pretty comfortably. People who are saying it's instantly going to fall over or whatever, maybe for Paxos or something like that, it becomes more problematic. But for the large exchanges, and I think the really interesting thing about that is it's actually, when you think about that as the business model of a stablecoin, of getting money into an exchange to generate transaction fees, it's actually very similar to Synthetix, right? SUSD is there to bring people into this trading thing and trading platform, generate transaction fees and pay those transaction fees out to the people who are providing collateral, right? So ultimately, I think most of the viable stablecoins have been viable because they've been attached to an exchange that makes a ton of money off trading fees and can operate this thing at a loss, right? Anyone who kind of proposes a self-sustaining, stablecoin platform that doesn't have some kind of fee capture in it, I think is pretty challenging. It's something that is hard to pull off. And to your first question, about hybrid stablecoins, people have been proposing baskets of stablecoins and baskets and meta baskets and hybrid baskets and rebalance, all kinds of crazy things for a long time, right? My fundamental issue, I guess, that I have with putting a good example of this is BTC++, right? So PyDAO is launching this, 4 different, right now, at least 4 different Bitcoin implementations on Ethereum. I think eventually it'll be 6 when REN BTC and TBTC launch, right? So you'll have 6 different BTC implementations all in a single pool. There's an argument to be made for that is diversification and therefore, is a good idea. There's an alternative argument that almost guarantees that one of them is going to blow up, right? And so, it's a question of do I expose myself to a 1/6 blow up risk, right? Where I lose a 6 of my money almost guaranteed, right? Because something's going to go wrong with one of these things, right? Or do I kind of, have this diversification where at least I don't lose all of it, right? And I guess, that's for individual, people to kind of address themselves what makes sense. But I've always had the skepticism around, let's just lump every single solution into a single pool, because it feels to me like you're just, asking for trouble, right? That one of them, something's going to happen to one of them, and you need the system to be robust enough to be able to absorb that. So the idea that you can have a bunch of permissioned assets, unless each one of them is less than 1 or 2% of the total pool, you're still exposing yourself to pretty large systemic risk.
It's a big risk. It's a good idea from some argumentation, but on the other side, I see the same point that we see basically the same point that you see. Okay.
The other thing, for example, is that right now a lot of people more than the others, trust centralized entity because people, trust BitGo because it's backed by Goldman Sachs, and so they use WBTC, and they prefer to use and to continue to use maybe some WBTC than other decentralized functions. And then there are also other people that prefer instead some fully decentralized, functions or digital assets, but it's a teeny fraction of the total. This right now.
Totally. And that's one of the aspects about USDC that I think the proof is really in what do you do personally, right? Part of the reason why I hold some USDC personally is I'm looking at it, I'm like, what? If Goldman blows up and has no money, then the world's on fire, right? So it doesn't even my stable coins are the least of my problems, right? So I think there is an element of trying to kind of hedge risk as much as possible. The interesting thing with stablecoins, though, versus say something, and this is why I didn't want to kind of leave that point and make it almost seem like I think with BTC that it's a bad idea to pool these things. I think with BTC it's okay, right? Because with BTC there's a potential yield, So the yield is offset by diversification, right? So, okay, let's say one of them blows up, but if BTC 10x's, then I kind of go, well, I've got that exposure, right? If for whatever reason I want to have exposure on, on Ethereum to Bitcoin, I want to be able to trade it for whatever reason, right? With stable coins, your upside is nothing, right? So therefore, if any one of them blows up, you're just sitting there. Your expected outcome is almost definitely negative if you throw a pile of random stable coins into a pool and say diversification, right? Whereas I think with Bitcoin, at least there's a little bit of offsetting, in that ideally you're trying to get some capital appreciation in there. So I think that's a distinction. I don't know if it's a great distinction, but that's my reasoning, I guess.
Great.
Yeah. And coming back to the Synthetix, what kind of, because you are really different from the other DeFi players, and what are the users that you have? What kind of users you have? What are the features, the characteristics of these features?
The segments,
I think a lot of the same people are in our community, right? I think there's a core DeFi group, right? Maybe it's a few thousand people. And I think a lot of those people are across all of DeFi, right? They're constantly looking at different DeFi platforms and what have you. Then I think there were a number of, maybe call them DAI outcasts, right? People who didn't quite, drink the DAI Kool-Aid, right? And somehow just found themselves over on our side, right? We're the only alternative. And then I think we have a lot of professional market makers, professional traders, people who understand the risk trade-offs of what we're doing, right? And they understand that it's significantly more risky than something like DAI. Right, but they also understand, ROI is based on, the risk that you're willing to take, right? And that if this is successful and, we can implement it and we can, do all the things that we're hoping to do, that, the potential return, it could be significant, right? And I think that's the reasoning that they sort of saw, particularly when you go back to late 2018, early 2019, when the total market cap of the project was like $5 million, right? There were a lot of people that kind of turned up and said, what's going on here? Right? This makes no sense, for what you guys have delivered, all these things, the potential upside. And, now we've kind of realized a lot of those, those returns. But that core group of people who believed, didn't believe that it could go, to $100 million market cap, they believe it can go significantly higher, right? On the basis that, we can ideally take on every single futures exchange, every single, spot exchange and really disrupt the market and take a lot of market share.
Great. And, okay, what about the sUSD adoption? Actually, most of the usages are basically for doing the trading, so operating on the exchange. Some of the sUSD are in some lending pools like AAVE. They were also on Fulcrum. But what's your vision of the adoption of sUSD, and what's your strategy to be adopted? So we are willing to see, not only related only to sUSD, but also to other stable coins. We saw that you build up some partnership with local companies over there to use basically your transport layer to basically move value. But what's the idea behind?
So, for us, we haven't focused on sUSD adoption because it didn't have sufficient liquidity, right? It's only maybe in the last month or so, right, that we've got sufficient liquidity in sUSD. To the point where, this trader I was talking about, I think over the course of, 12 hours or something like that, moved $1.5 or $2 million worth of sUSD in and out through the Curve pool, right? I think the slippage on $1 million trade in Curve right now is about 1%, maybe slightly less than 1%. So I think it's now at a point where we've got sufficient liquidity where, it feels real, right? sUSD is money, right? You can convert it to any other stable coin. You can convert it to ETH very easily. You can really, access a lot of liquidity to get out of it. And that's ultimately what you need and what we didn't have for a long time. And so I think we've kind of gone through this sort of phase shift in sUSD awareness and belief, where people genuinely are like, okay, this is a real thing now, and it's serious. One of the trade-offs of that is debt in the system feels a lot more real these days than maybe it did 6 to 12 months ago. When you look at that debt number, you're like, that's a real debt that I need to pay back now. So I think it's a point where we can start to do some integrations and some interesting things that we've wanted to do for a long time, like these local on-ramps and off-ramps, but just haven't had the liquidity to be able to do. But ultimately, our focus, certainly for the next 12 months, is on the exchange. sUSD is really an on-ramp onto the exchange. Any adoption of sUSD outside of the exchange is a bonus for us. It's just added value. So
clear. And what about you with the other release? You finally, and a lot of users are very happy for that you had the traditional indexes. So how they get used with, also some numbers about the platform. So is going good? Are you going to add new indexes shortly? What's the plan?
Yeah, I mean, these indexes were not necessarily, the most in demand. I think it was a compromise that the community struck, to kind of pick some indexes that were not going to be high profile, right? And not necessarily going to trigger, any regulatory scrutiny. I think the big demand will probably be for individual equities, right? And there's a pattern that's played out through the entire project, right? We offered fiat currencies. Trading fiat currencies with no leverage is pretty boring, as most people who trade FX know, right? You need 10, 15, 20x leverage for it to get interesting. And it wasn't until we added things like synthetic Bitcoin and synthetic gold that people got excited, right? Because really they want volatility if you're going to be trading, right?
Yeah.
And so adding an index of equities like the FTSE or Nikkei or whatever, I mean, lately everything's volatile, right? So, it's kind of an anomaly, right? But, in normal terms, they're moving, a few percent a day, 0.5% a day or whatever, right? In a normal environment. And it's just not that interesting. So I think until you get individual equities that, have a more volatility, people are not going to be that interested. And that kind of question of when we get those is really a combination of the community, Chainlink, supporting them. There's some upgrades that need to happen in the system around market closure handling and things like that. So I think we're getting close, and certainly the community is pushing hard to get it done. But it's probably still a few months away, I would say. But until we have individual equities, I don't expect a significant amount of adoption, really.
Okay, great.
And these features have been released with the other release. So, and with the other release, you released also another cool thing that, for example, me and Emiliano, we studied a lot, that it's the concept of delegation.
Yeah.
And we would like to ask you, what kind of functionalities do you expect from the delegation? What kind of usage do you imagine for this delegation?
I mean, using Synthetix and staking in Synthetix is challenging, at the best of times, right? It's a complex system, as you guys know, obviously, and I think that one of the things that we talked about in the early days a lot was this idea of, delegated staking pools, right? Essentially being able to, put SNX into a pool and, pay a fee. Right. What was really interesting to me when I saw, the project that you guys launched, right, which was I was totally surprised and blindsided. I was like, where did this come from? Like most of the time when people are building something, they come and bother me a lot and they're like, hey, I want to do this. What do you think? And they'll send me screenshots and stuff, which is amazing. I love it. Right. Like I want people to do it as much as possible.
Time-consuming.
It's pretty rare for someone to be like, hey, I did this. And I was like, what is going on here, right? But I think that one of the things that's interesting about the approach that you guys have taken is we always had this idea, and this is why I love when people, kind of come at things fresh, right? We always had this idea, in order for it to work, that people would have to delegate their SNX to a pool and sort of give up some level of control so that the fees that were generated could be captured by the pool, right? Because no one's going to do something for free. I think the interesting approach that you guys have taken by essentially having people prepay the fees, right, is quite good, because I can then prepay it and accept that you guys are going to siphon off some of the fees. So for me, I think that's a bit of a different approach to the problem than we were sort of thinking. And I think there's multiple layers. I think you'll have full custodial staking where you literally send the tokens and walk away and go sit on the beach and hope that they do a good job, right? Send them to Binance, to Coinbase or whatever, and they custody for them and do everything, right? Then you're going to have trustless pools that do delegation, where you send it to a smart contract, but you've got some control over withdrawals and how all that works. And then I think you're going to have these delegation pools like you guys have built, where you're not even really giving up custody at all. You're just essentially paying for a service for someone to help you to kind of go through the process, which is great to have this full range, right? And then people who individually stake themselves, obviously, and just do everything themselves and don't have any help or whatever. And so I think this continuum, it's amazing to have things all along it. And the more solutions we have, the more useful it is for users who can pick, okay, this is the right thing for me, right? I don't want to give up total custody. I don't want to do it myself. I want to find that middle ground. So I think it's pretty amazing. It's a pretty great platform.
Great.
Thanks.
And coming after with the advancement of adding more collateral to Synthetix, how is going the development of using ETH and debit with sUSD?
It was going well until Samsung came along and ruined the party for everyone, as he loves to do. No, I'm joking. He's an awesome guy. He does a lot. Obviously the fact that there was no funds at risk was great, but even the possibility of funds being at risk in the future with contracts on mainnet. The fact that he was able to catch that and we were able to address it so quickly is amazing, and we love him. He's an awesome guy. But I think, that's definitely caused us to look at accelerating the next phase of the trial. We were seeing a decent amount of adoption. I think there was a few thousand ETH at any given time that was being, put up as collateral. And we always knew that it was a high friction way of setting up the system, right? Because you were not borrowing USD denominated, you're borrowing ETH denominated, which is not ideal for anyone, right? It was really a proof of concept that we could kind of get it going. So in the next phase, you'll be able to borrow ETH denominated, you'll be able to borrow USD denominated, and we think that will significantly increase adoption. Hopefully that's going to be faster than the original date, which was about 3 months, right? So I think, hopefully it'll be closer to 4 to 6 weeks away. And then, the really interesting thing after that, I think, is the potential for using stablecoins, right? So, people putting up stablecoins to borrow, sUSD and other things. I mean, the question is, which ones do you use? There aren't any permissionless ones left. So what does that, kind of do for us? I still think we'll probably end up using DAI, most likely. But, then the really interesting thing is getting BTC in. And it's a similar problem, right? I like Wrapped BTC. I think it's a great project, but it's not as trustless as I think it needs to be. So something like TBTC or REN BTC is probably much closer. But, we don't want to throw a project that's just been on mainnet into the Synthetix ecosystem. We need to give it a bit of time, I think, before we really incorporate it, or we control the trial of it very, very tightly. So we're going to be looking at that very closely. But ideally, by the time we get to the end of the year, you'll be able to use stable coins, ETH and BTC, all on Ethereum as collateral to then borrow in a number of different denominations.
Yeah. And another thing related to this point, because you had stability to the system if you had just, if you had solid collateral like Ethereum, like BTC and whatever. But the other thing that it's, a bit weak now, in my opinion, is that there are, from one side it's good that there are a lot of SNX staked, locked, but there are a few SNX in the market, and so it's a really volatile, the price of the SNX for this low circulating supply. So do you have some plan to solve this kind of thing?
I think the ultimate plan is we need to get out of, if you think about it in terms of price discovery phases, right? We're in the high growth speculative phase of SNX, right? How big can it get? How, what's the potential cash flow, et cetera? And right now, that sort of cone of probability is 90 degrees, right? We have no idea. It could be anything, right? And so, we I think, need to get to a point where we've got at least some established price floor, right? Where someone can look at it and say, the yield on this thing over the last year has been X, barring some catastrophe, it's probably not going to deviate by, more than, 10 or 20% downwards. Therefore, I can sort of establish a price floor for it. And so therefore, you shouldn't really have people selling SNX below that floor, right? Below whatever the future cash flow, of the asset should yield, right? By staking. Until we get to that point, and we don't know how long that will take, it is going to be volatile. And that's one of the reasons why we have such a high collateralization ratio, right? The C ratio right now is 800%. And it's purely designed to buffer that volatility, right? And so, until we get out of this hyper speculative price discovery phase and into something, more reasonable, we just have to grin and bear it, I think.
Great. Clear. Very, very clear. So, what will be the next features that we will see in the coming releases? So, which are the most interesting and important ones?
So, one of the things that I love about this I love and hate about this project, right, is it doesn't matter. It feels like no matter how much you do, no matter how much you deliver, every single time you deliver something, there's 10 more things that need to be done, right? And the surface area just gets bigger and bigger and bigger, and there's more stuff to do, which is exciting on one hand, right? But it's terrifying on the other hand, right? And is something that's very challenging to manage. But even this morning, I was thinking about, we had a meeting with the guys from DeFi, who were a group in New York who helped us with the listing framework. And one of the things that they've been pushing hard for is open interest caps on the spot tokens, right? So, essentially saying, look, okay, it's fine if you want to list, Monero, right? But if you're going to list Monero, you need to have an open interest cap of $1 million on long and short. Right. So someone can't turn up and get $5 million, go and manipulate the spot market, and then, like what happened with Maker, right? And, had we had open interest caps on Maker, that wouldn't have happened, right? It would have prevented that attack or seriously minimized the damage, right? And so I think that even something like that, where, it's a minor improvement to the protocol, but, I was thinking about it this morning. I'm like, we really need to do this, right? And there's 10 other things that we also really need to do. So some of the stuff that's coming up, we've got a contributor to the project who's worked on the project for a long time, but is not part of the core team, that's working on a mechanism for binary options, which is pretty interesting, right? So essentially it's like a pari-mutuel binary option, right? So there's a pool that, determines the price, right, of the option. And, it can be binary. It can also be multimodal, but most likely it'll be binary. So over under, right? So, over under end of April, Bitcoin 68.50. Right? Which way does it go? And, it'll trade for 3 weeks or whatever, and then it'll expire to 0 or 1. So that's something that I think a lot of people are going to be really interested in, particularly the ability to just turn up on Synthetix exchange with, some SUSD and, open up a hedge position essentially on BTC, over under. The other major change to the protocol that's coming is synthetic positions, which is essentially future.
Okay, and for the binary option, that is still distributed to SNX stakers?
Correct, yeah. But the interesting thing is, because it's pari-mutuel, there's no downside, right, to stakers. So, the actual payout is capped to the open interest. So it makes it much safer, I suppose, right, for the stakers themselves. There is a little bit of risk around, some of the way that the auction initially is kind of priced, right, because you still need to get some open interest to get the pricing there. But, fundamentally, it's kind of limited downside.
Clear. Clear.
which is nice. It's nice for the
Yeah.
seekers.
It's quite interesting as.
And leverage instruments, for example, 3, 5.
So this has been something that I think has kind of been a trade-off that we've had for a long time, right? Do we just launch leverage for the spot tokens, right? What we think of SBTC and IBTC as more like a spot market, right? You come in and you essentially buy or sell or whatever, right? I think when you get to synthetic positions, which is essentially synthetic futures, right, and you can open up a leverage position at a specific price, specific number of contracts, and trade it as if you were on a futures exchange. I think that will be much better, because rather than having this kind of rough inverse index that you're using, you'll be able to just go in and short, right? You'll be able to short Bitcoin at 68.50 right now, and not worry about this drift between tracking the price. It'll just be a normal short. It'll have liquidation price. It'll have you can set a take profit price or whatever, and that's it, right? And so that the synthetic futures are probably still kind of 2 to 3 months away. And so then the question that we're always weighing up these trade-offs is: do we put leverage into the spot tokens and bear all the risk, especially when there's no open interest caps? Or do we wait for synthetic futures to launch and set that up? So these are some of the questions that I think the community is constantly grappling with around allocation of resources, etc.
Great. And before coming to the user question, we have several users that asked on the YouTube channel some challenging question, I can say.
Great, good. I love challenging questions at 10 o'clock on a Saturday.
Okay, we would like to dive a little bit in the security and governance part of the platforms. So first of all, we would like to understand how did you experience the Black Thursday, basically? So how the Synthetix platform reacted, and which was the problems, the issues that you had, and how do you mitigate them?
Yeah, so I think interestingly, and this is one of the benefits of being on mainnet for so long, right, and having had so many catastrophes that you've gone through already, is you become ideally more resilient, right, or you're dead. And we're still here, and so the system is much more resilient than it used to be, particularly on the oracles, right? So we haven't handed over control of all of the oracles to Chainlink yet. And what was interesting is our oracles were very stable, right? We had a little bit of an issue as Gwei went up, in that it was taking a little bit more time to kind of confirm on chain than we would have liked, but we never exceeded our normal sort of tolerances, right, of what we expect. Chainlink had some issues with their oracles where some of the node operators were having trouble getting transactions confirmed on. I mean, everyone's having trouble getting transactions confirmed on chain, but they were having trouble, with sort of cycling transactions, etc. So that was probably the biggest risk. Other than that, it was a pretty, other than me actually trading myself in the spot markets on Kraken, there wasn't too much going on, right? We were able to kind of just monitor the situation and watch it. I did get woken up, I think, at 1:30 or something like that in the morning that night, when we started to see, it started to get to a point where we were like, okay, we need to be really on top of this because, the situation's escalating, and, if it got to the point where it's 500 Gwei or 1,000 Gwei or something like that, we needed to make some calls. And so, I think we made the right call to, pause the network and just wait a little bit to kind of see how things played out, and switch the oracles, to a longer wait time. But overall, it was not, not the worst day that we've had in the last 6 months for us personally.
No, clear. And what about the now after Fulcrum, Explorer, and other things, maybe essentially Maker issues? A lot of users now are focusing on securities and basically how the platform is administered. So the question is, is Synthetix audited, and how do you approach the update that you do with the platform? So basically from a review of the code with external parties, plus the upgradability of the platform. So how the user experience the fact that you can upgrade as you wish. And do you have in plan to implement some sort of time lock or permissioned by user upgrades, something like this?
Yeah, it's a very important question, I think, and it's something that I've talked about in a number of places, and in fact, I'm in the middle of writing a blog post about this transition and the next phase of it now, right? So we launched a protocol DAO, which is essentially a DAO that was designed to govern the protocol and protocol upgrade governance process a few months ago, and it's been managing, as opposed to using an offline multi-sig setup. We've now got an on-chain multi-sig that essentially manages the core team and the protocol.
Cool.
Right, to the point where essentially we could. Oh, sorry.
I have a problem with the internet connection. Sorry.
Right. Okay. Gotcha.
Okay. If you can repeat, please, it would be better. Thanks.
Yeah. Sure. Of course. So we have had. The protocol DAO has been operating for the last couple of months, right? It's an on-chain multi-sig, uses Gnosis, but it's a bit of a blunt instrument, right? It doesn't give a lot of sort of granular control over protocol upgrades, and the team still retains a lot of control over what happens. So, we can arbitrarily upgrade the logic at any time, right? In any one of the contracts to do essentially anything. That's the power that we have, right? And on one hand, that's crazy, right? We were talking about USDC, and they've got the ability to blacklist accounts and things like that. The argument for why we've maintained that control as long as we have done is basically that we wanted to ensure that we were building something that had value before we started to cut bridges and decentralize, right? It's in my view, right? Decentralization adds value to something, right? But if a thing has no value, right, and you multiply it by 10, it's still 0, right? And so until we got Synthetix to a point where people actually believed that it had value, and it wasn't just the core kind of group of people that were participating, it didn't make sense to kind of make this trade-off between the speed of iteration and control. But I think we're now at a point where the tooling is available, the timing is right, and we need to hand back some control over the protocol to token holders directly. One of the other challenges is I'm a very firm believer that on-chain governance and token voting is a very dangerous path to go down, right? And can lead you into challenging directions. And we've done very well, I think, by the fact that we have a rough consensus, and the community has agreed with all the protocol upgrades that we've made over the last year or so, right? We haven't had a contentious upgrade in the last year. Before that, the community just kind of accepted the core team was going to do what they did. But since we've implemented the SIP process, every single thing that we've done has been approved by the community. But I think we are getting into a point now where the value of the protocol is so high that we need to introduce larger checks and balances. And one of those checks is time locks, right? But there's a trade-off where if something happens right now and we can't pause the system, right, then we're in trouble. And so the question is, how do you weigh up the ability to pause the system, right, with security and censorship resistance, right? And the solution to this that we've devised is to allow the protocol DAO members to pause the contracts, but to allow token holders to unpause them. So the token holders ultimately have the ability to override anything that the protocol DAO does, right? And the same thing for protocol upgrades. So if the protocol DAO says, here's the next upgrade that's going to happen, right? This is all the contracts that are going to change. Here's the published code. You can see it on GitHub. You can see everything here. It's all on chain and verifiable. And the community says, no, sorry, this is not what we agreed. This isn't what you're supposed to be doing. You said you're going to do this, and this is doing this, right? Then token holders will be essentially within the grace period, right? The time lock period, be able to veto that change.
That's I think it's a nice implementation of it's a good trade-off. I mean, it's one of the first time that I hear about more evaluated way to manage.
It's a very difficult problem, right? It's not a trivial problem at all. And if you force every upgrade to go through a governance process in a positive sense, you're just going to slow the thing down massively, right? So our argument is, let's go through our rough consensus process. It's slower than it used to be, a couple of years ago, but it's still fairly quick. We can come to an agreement within a week or so, typically, as a community. And if the community all agrees and we do something, then there shouldn't be a veto. If the community doesn't agree and we do something, then there should be a veto. And it should be sort of management by exception, right? Let the protocol DAO do what it's doing until we do something that's wrong. We step out of line and then chop our heads off.
Clear, very clear. And I think that we can start with the community question.
One important question that we didn't ask right now. It's the governance. How it's structured, the governance of the Synthetix now.
So essentially, we have when we're talking about protocol upgrades and what happens and how it works. There is a roadmap for all of the changes that are proposed, right? And over the last 3 to 6 months, this has been decentralized even further. So there's various parties that are taking on chunks of this roadmap, right? That are starting to work on it. And ultimately, anyone can turn up and propose a SIP, and has done, right, in the past. So one of the biggest changes that we had was a community member proposing a SIP to change the inflation schedule, which I was initially very against. Right, I said no, we shouldn't do this. Let's not mess with it or whatever. But the community came to consensus and bypassed me essentially. And eventually, I came to the conclusion that it actually was the right thing to do. But even had I not done that, it would have happened. Right, the community was able to convince enough people, and it was just a thing that was going to occur. So we use a form of rough consensus within our Discord community, within various other places, to essentially reach some consensus on making these changes. And the good thing is, as opposed to very large communities like Bitcoin, we're still a very small and tight-knit community. And so we're not yet at a point where, everything's ossified and nothing can change. We can still agree fairly rapidly on changes. But, that's something that I think, again, we need to kind of continue to foster and look at and decide how we want to operate this, because the alternative, which is throwing our hands up and just going to on-chain votes, in my view, is a very, very bad place to go to, right? We need to, the advantages of rough consensus are that it forces people to engage, and you really need to build consensus and get people on board. So, we have some very robust debates within Discord and disagreements, but ultimately we get to that place.
Great. Okay.
Yeah. I think that we can proceed with the questions.
Yeah. I have other questions, but we can do it at the end related to other DAOs that you put in place. So the first question from I don't see the name, but is the FreeDP user is the following. So we all know that SNX is not a buy and forget token because as if you want to capture its value, there's quite a bit of work to do. I mean, all the stuff that you have to do, stake, collateralization management, etc., etc. And this is usually quite in contrast with what VCs want. So what's the current relationship between Synthetix and the VCs?
Yeah, I mean, there's a pretty strong filter, right? For VCs, they have to be a little bit crazy. So if you look at the framework guys, right? I love them, but they're definitely, I think, on the bleeding edge of how much they participate in the networks that they invest in, right? And that's fine, right? We want people who are going to participate. That's something that we sort of advocate pretty heavily. But I think we do need to get to a point where we have, this goes back to our conversation around the continuum of staking solutions, right? I think we do need ultimately to have a full custodial solution where someone can,
manage all the stuff,
participate manage everything, and someone just says, I want to participate in this network because I believe it's a good idea, but I know that I'm not capable, or I don't have a mandate to sit here and press buttons all day, right? So I want to hand this over to this person, and they're going to manage it for me. And there's people out there who can do that. There's a ton of solutions, including exchanges, things like Coinbase custody. There's all kinds of people out there who that is their total focus.
Great.
And another question from the same user is really interesting because it's for regulator. So how do you see the whole Synthetix ecosystem fitting in the current regulation environment?
I mean, what current regulation environment, right? Like, I think in which country, in which universe, in which galaxy, I don't know. I think if you look at the US regulatory environment, my sense is that, given everything that's happening in the world right now, regulators probably have bigger issues than worrying about what Synthetix is doing. But ultimately, our view is, and this goes back, all the way back to the Ether Delta case, right? We don't provide a trading venue. We don't match counterparties, and we don't collect revenue as a for-profit entity for doing any of those things, right? And those were three very bright lines that were sort of described, I think, in that case, that you should not cross, right? And we don't cross any of them, which doesn't mean that we don't do anything that a regulator may not like. But we're very much inside the lines right now in terms of what we're offering. And I think Synthetix is a solution that it's not really clear, what the regulatory response to it is going to be, right? And so for us, we do our best to ensure that the protocol is governed by the token holders, and that all of the value that's created in the protocol is captured by token holders. And sorry, I did warn you that my daughter might wake up. But yeah, so that's that's our view. I think from a regulatory perspective, we don't think we trigger any particular issues right now, but we have to kind of monitor what the future holds. But ultimately, the token holders are in control of what happens within the protocol and how it's operated. So the further we go down that path of decentralized governance, the more censorship resistant the protocol becomes, and then it doesn't matter what a regulator thinks about me or any particular token holder, because it's all the token holders collectively who are governing the system.
Yes.
Yeah, that's the last questions, I think, and it's done.
Yeah, and the same user asked if obviously if you can share, if you see in the near future, so in the short medium term, other VCs that are going to invest in Synthetix platform.
Look, we get inbound interest all the time, as you can imagine, right? We're one of the largest tokens and one of the biggest DeFi projects. So a lot of VCs I think are now sort of playing catch up on the DeFi space. Yeah. So we get inbound interest all the time. People who just want to chat and find out, what is this DeFi thing? What are you guys doing? It takes a long time, I think, for people to get comfortable with Synthetix. It's not an easy to understand project. And so if you're just a VC who's just come to DeFi, Synthetix is probably not the first place you should dip your toes in the water, right? There's other saner projects out there. And so, I think we're obviously always open to, to anyone who wants to participate. But, to the earlier question, I think there's things that we can do to make it easier, right? And having full custody solutions that are within the mandate of VCs will make that easier. But for now, we're very happy with the position we're in. We've got a lot of runway in both crypto and cash. So we don't have a huge urgency to raise any funds, and we're kind of happy to just wait it out over the next 12 to 18 months.
Great. And the latest two questions from the user are basically related.
Is this the same user? Is this guy?
No. Now there is another user.
Gotcha. I was like, okay, jump into Discord. You can harass me.
I know, in fact. And So, what's your opinion on the Maker plan to dissolving the foundation, and what's the plan in this sense with Synthetix?
So it's kind of funny, right? Because we announced our plans to dissolve the foundation, and I've been talking to a number of people in the DeFi space about my views around foundations and how I think this foundation pattern that goes all the way back to Mastercoin and Omni is just ultimately a really dumb, bad idea. Like a lot of things that we did in crypto back in the good old days. I think it's just a thing that doesn't make sense anymore, right? We now have the mechanisms and tooling in place, things like Aragon, things like Moloch. Like there are DAO frameworks that can support almost any size of project and any functionality that's required. So having a legal foundation set up in Switzerland just doesn't make sense anymore, in my opinion, right? I don't think it ever made sense, but crypto, often we do dumb things just because someone else did a dumb thing, and we all kind of follow each other off the cliff. And so I think that a lot of the big DeFi projects will be working through this. Kyber has talked about decentralizing and getting rid of all of their legal entities. I think ultimately we're all going to need to go through a similar path. So it makes total sense that Maker's looking at the same thing. I think we're all kind of convergent evolution, realizing that this thing that we all did was a dumb thing and we shouldn't have done it.
Absolutely. And the last
about the governance, but we discussed about this, I think, during the conversation.
Yeah. Do you mean yes? There is a user that asks basically what will be the future of Synthetix token. I mean, if you imagine a DAO scenario, or will be just the collateral for the exchange platform. So this is the last question.
Yeah, so I think the way that we're sort of headed is that SNX will be a governance token, right? In some ways, because it will allow people to sort of control what can happen in terms of the protocol upgrades. But at the same time, it won't necessarily be a positive sort of voting structure, if that makes sense, right? It won't necessarily allow you to, vote to have something happen. It'll allow you to vote to stop something from happening. In order to kind of participate in the governance positively, you'll need to go through our SIP process, and you'll need to essentially, interact with the community, reach consensus, and go through all of that process to kind of submit a proposal. It won't be just you've got 5 million tokens, you can push through a proposal to do something that you want, or pay out some money or something like that. I think that's a bad idea.
Clear.
Okay.
Yeah, I think that we finish with all the questions.
The last usual question that general host we asked to our special guest is if you have some questions for us for DeFi Italy.
Yeah, I'm curious how you guys are handling all of the kind of craziness. Have you had any impact on the kind of community engagement? I know we've definitely had in our Discord a bit of a kind of drop off in terms of overall engagement. Some people are more engaged, but there's been a little bit less noise. So I'm kind of curious how you guys are handling that as a community. Have you found it to be a big impact, or you're just kind of pushing through?
So DeFi Italy right now is the biggest national community about DeFi. And we started to receive a lot of questions from our community about Synthetix. And me and Emiliano had already studied the Synthetix because we invested on it, like different months ago. And we start to develop some guides, some tutorials, some YouTube videos to explain how it works in Italian, and one in Italian, one in English, and now we would like to do others in Italian just to make more simpler the experience for Synthetix. Because we believe that there is a real value and a real innovation in your project, and for this we start to also work on SNX Link, because we want to simplify as much as possible. obviously leveraging our community as early adopters and us first, me and Emiliano, to claim the tokens. And another, for example, feature that we are going to do is to automatically balance the exposure to the Synths to have zero exposure to the platform, to the system.
Awesome.
Yeah, we are going to do this kind of stuff, and I mean, we like it, and we are happy to do that.
So one other question, which kind of goes back to my earlier point about, I don't often get someone just throw something at me that's fully formed in the way that you guys did with SNX Link. How long have you guys been working on the project for?
I think we can stay between 2 weeks, approximately 2 weeks. Yeah.
Wow. Okay, that's impressive. That's impressive. We really didn't think that anyone would be able to stand something up that quickly. From after delegation was released, we thought it was going to take a bit longer. So it seemed like you guys must have been working on it for a lot longer than that. That's pretty impressive.
No, if you want to know the real truth, that is, I mean, it's real that we working in 1-2 weeks. So basically, we always communicate to our user the new product features that any platform is going to add. The new, I mean, for example, for Maker, the new proposal that are going to be voted and so on. So basically, when we was tuned to say, hey guys, you know that at the end of March there will be the new other release, and they are going to introduce this and this, we saw the delegation feature, and something in my mind sparkled up. And then I think that we talk about that again on the last Friday. And in the last Fridays, me and Simone talk about how we can do this kind of job. And I think that from Friday night until Saturday morning, I developed the idea of the smart contract. On Sunday, if you see, it was in production, basically. And you will see also that I did some tests with other contracts that failed, obviously, because I want to going out immediately. But don't want to bother too much about testing all the stuff, because it was related to the claim. So I had few accounts to do the test, so I write all the tests. If you look to the repository, I mean, not you maybe directly, but other, it's fully tested, the single part that we developed. But I think that in one day, this kind of activity could be done from a technical perspective. Obviously, the most important fact that is basically the value proposition of the project is the UX. So basically, I spent all the nights of this week, from Monday basically to Thursday, to basically build up the UX, do some reiteration with Simone, because the idea is, as you may see, is we propose something that on the lower layer basically protect the user to don't spend too much. So we leverage max gas price, how much you are willing to spend. From an higher perspective, what we want to say is, hey, how many claims do you want to prepay? So basically this was the hardest part to do. And to be honest, I'm not the most skilled front-enders on that side, but I know pretty well how to manage stuff from a backend infrastructure and smart contract side. So that's it.
There's also another part that we did in this week that is all the plan in the future, and you will see. You will see.
Awesome. It was funny because when I saw the way that you guys had approached the prepaying, one of the ways we were thinking about doing limit orders was to essentially have like a relay network where people could prepay for trades. Right. Once trade delegation came out, we've actually got a team that's working on this problem now, that's taking a slightly different approach, like more like a gas station network approach rather than a relayer. It's a similar approach, but slightly different, not like using the delegation. But one of the ways we thought about it is you could prepay the gas to cover the gas for the network, right? So I was like, oh, okay, at least some other people are thinking about a similar solution. So it's cool. Yeah.
To be honest, we thought about the gas station network too, but it was a little bit trickier from a realization point of view. I mean, that we need to do some arrangement on the smart contract side.
It's a lot of work.
Yeah. But to be honest, the prepay you have to do for sure, because you to the gas station you have to forward the funds basically when the relayer arrives. We wanted to test the idea of keepers that basically join the platform, be refunded and receive some sort of reward. But probably in the future we will have, like a keeper, also some relayer of the gas station network. So obviously now we have our keepers basically just to claim basically for, on behalf of the users. But anyway, anyone could participate. Having as part of the keepers gas station network or other basically platform that do the job is something that is quite could be quite interesting, and it was explored. But to be fast, to be able to deliver in less than a week, this was the solution.
Thank you very much. Thank you very much.
Nice, awesome. All right, thanks guys. That was really fun. That was great conversation.
You and your family. Bye.
Thank you. Yeah, my daughter's running around finding her eggs right now, so I better put her back in bed. Awesome. Thanks, guys. See ya.
Bye. Bye.
Bye. Thank you. Bye.
Bye.